why trading size and stops are maybe the most important thing that you should focus on right now. Welcome back. Let's do another episode. I just recorded the one about trade management, and I got a question about, I got a lot of questions about how you stay in trades, how do you deal with drawdowns, stops always take me out. And I thought about it, and I think at the core of it are always size and stops. First of all, I would say most, it's fair enough to say, most traders, especially the struggling traders, are over leveraging, which means that they are taking positions that are way, way, way too big for their account. And this is especially true for traders who trade small accounts. It's very hard to trade a small account with reasonable risk management. But if you use position sizes that are too big, even small moves against your position will have a very, very big impact on your account, will easily lead to large losses, will easily lead to emotional issues, and then you will not see things clearly anymore. You get emotional, you get reactive, and you just lose the bigger picture. So reducing the size of your positions and just seeing how it impacts the way you look at charts. I remember I did this in the beginning of my trading career. I was also guilty of using positions that are too big. But then I made the decision to just take the trades that I would usually take, but use a very, very small position size and just see and observe myself around the trade. And I noticed a very, very big difference. And I was moving away from, and I was forcing myself to just accept, okay, the next 6, 12, 18, 24 months, it's not going to be about how can I turn $50 into $1 billion, which probably most traders want to do and try to do. But it's just about understanding the market, really understanding my trading system, myself as a trader, really getting to know myself. How do I deal with risk? How do I deal with drawdowns? And just trying to figure that out. And this was actually the first time that I could look through all this emotional noise once I reduced my sizes a lot, and it made trading fun again, because before that I was always chasing my own tail, big losses, big blow-ups. But once I recognized that a small position size will allow me to sit through drawdowns and really make good observations about what the market is doing, how it is behaving around my entries, my stops, my take profits, how the market is behaving around certain news events, around support and resistance. This really changed the way I looked at charts, and I'm trying to remember. There was an interview, I'm not sure, it was one of those legendary trading books, where also one trader who used to lose a very, very, very big amount, and then his boss or his colleague said, just enter a market with the smallest position size and observe it. And he said that once you have a little bit money on the table, you will learn so much about the markets, about yourself. And this is exactly what I did, and it was true. Entering a market and just observing how the market moves made such a huge difference for me. And I recognized that the smaller the position size, the clearer, the more clarity you will have in your thoughts. The less emotional you will be, and often the better your trading decisions will be. And the second point, the second metric or concept is stop size. Many traders don't realize that the stop size has such a big impact on everything in your trading environment. And stops are, what many traders do is that they use very tight stops, especially traders with small accounts and or unrealistic growth expectations, because, a small stop loss means you can have a bigger trade, and then obviously you can have a larger reward to risk ratio potentially when your stops are small, and then potentially you can make maybe larger profits. However, in reality, what most traders realize, and when I talk to them, it's a big issue, is that even small retracements will take them out. And the biggest problem, or even a bigger problem, is then the traders who say, I trade the 1 hour and the 4 hour, and I go to the 15-minute to fine-tune my trade. What does it even mean, fine-tuning? It's just a lame excuse to go to a lower time frame, look for maybe a quicker entry, look for a tighter stop loss, and then you're screwed. Because you're saying you trade the higher time frames and then you try to fine-tune something on such a low time frame. It doesn't make any sense. Instead, you should go higher. Look for a higher time frame. Try to take your trade there. Use a wider stop loss, a wider target. Avoid the volatility, avoid the noise, and just have a more passive approach to your stops. Moritz said it so nicely in our Singapore event last year. He said, how did it go? He said that reduce the need to be right. Or he said a wider stop loss reduces the need to be right all the time, because you will give your trade more room, obviously. The price will have more room to breathe, to move around. And this is something that I think many traders should approach in their trading, together with the first point of using smaller position sizes, and also be maybe a little bit more generous with your stop loss size. This could have a big impact because it helps you move away from this emotional, overreactive, impulsive trading where you don't really think anymore, and you're just trying to squeeze out a few points here and there, and volatility picks up. And especially in this market today, or this week, or last week, you will get slaughtered. But a wider position size, a wider stop loss might have been much more effective for you. So again, there's no right or wrong. What I'm saying is just opinions. Try it out, use it for what it's worth, but make sure that you're not trading with your head in the sand. Try to be open-minded. Don't follow all this generic advice. Don't try to be a duplicate of someone. Don't try to be a clone. Think for yourself and just explore different opportunities and see what makes sense to you. Until the next podcast, happy trading.